speaking of Zillow, let's get into the next article. Zillow expects another record year for home sales. So Zillow's 2021 housing forecast, which you can download on their website, it echoes the projections of other industry experts for acceleration of home sales and a appreciation. So the numbers anticipated to be even higher than 2021. So I'm assuming that they're also thinking that more inventory will hit, and due to the more inventory, it's not going to quench the thirst of the buyer's market. That they'll just have more product to buy. Kind of what like Lawrence Yun was saying. There's still 3 million buyers that are still looking to buy. In fact, the company has already updated its December 2020 forecast. I guess this article was. Maybe is that a typo? Oh, Zillow initially expected a 10.3 increase in home values through November of 2021. So it's already updated it since then. It's gone up 3%. So approximately 5.6 million existing home sales were sold in 2020, a 5.3 increase from 2019, according to officials. Zillow predicts 6.82 million existing home sales in 2021. That's the most recorded in any single calendar year since 2005. You recall we just did the article a couple of minutes ago that we just had the most home sales of any since 2006. So this would be the next highest number. The quarterly home value index growth as of December 2020 was 3.2%. It's the strongest 3-month appreciation since 1996. So I'll get into a quote, and then I'd love to hear some of the comments and opinions of the people in Clubhouse and also the commenters who are commenting on the Facebook page or YouTube. Home values rose sharply near the end of the year, their fastest quarterly rate on record, said Jeff Tucker, Zillow senior economist. Sales are taking place at a rapid clip as momentum gathering in the market since June is pushing forward at full force and is expected to continue for the foreseeable future. For some reason, that was real hard for me to say. So they are thinking that there's obviously going to be more inventory hitting the market, and it's not going to quench those buyers, and that we're going to have more and more sales and transactions, which I could also see. I could see that happening. Dan?
I mean, I think it's kind of a no-duh prediction. So what I want the predictions that say, when is the market going to ease? When are we going to get more inventory? When is this going to chill? When are home prices going to go down, because we keep seeing gains? So I think it's a no-duh prediction to say, no, it's going to keep going up this year. Sure.
And the housing affordability is something that we were talking about ad nauseum last year and the year before.
Yeah.
And how out of reach and out of range the home prices were. When the rates dropped, more people could afford the homes. So we haven't heard that much in the last couple of months, but then you'll see occasional stories about bidding wars, $20,000, $40,000, $50,000 over list price.
Right.
And that always, starts the conversation again about affordability and where we're at.
Well, then our next story does cover where affordability is at and loan amounts now, that keeps going up. So it's at some point the levee's going to break. There's too many things pushing against this dam it's going to break. Home prices can't keep going up like this because affordability cannot be sustained. It can't. And I've been literally saying that the entirety of this show, which is 3 years, is this can't be sustained. But when you bring mortgage rates down, just like you mentioned, right? When you bring them down, cool, that opens up affordability because it brings down what their payment will be. And I just got a buyer pre-approved yesterday or day before that is approved for way more than they thought. Way more. I mean, up into the 800,000 range. And they are like, okay. And then it just becomes the comfortability level of what they want to pay per month. But again, I want to predict, when is this all going to ease? Like, I don't see a bunch of flooding listings into the market. I don't see that happening. And if you want to go to Colin's comment, I don't know if you can find a third hand, but perfect. Colin makes a great statement there because he says, in 7 out of 10 school districts I cover, meaning Colin, and he's in Pennsylvania, we are 1 month supply or less. And where he's at, 1 month supply or less is insane. I mean, they're usually averaging, I think, 5 or 6 months. Of course, Colin can correct me, but we are going to be chasing our tails. Builders, rate increases, and foreclosures are the only things that can pull us out of this. So I think that's a very astute statement, as Colin always has great statements. And that's kind of a rough prediction of what needs to happen for this to ease, right?
Yeah, I would agree. I mean, we know that housing starts in January of last year. We're 13% higher than normal. And we talked about that heading into the year. We said, hey, this is going to be the year that inventory is back on track. And you remember like Zillow and Redfin and all of those saying that by the end of 2020 I think it was by the end of 2020, it's going to be a buyer's market. You remember that?
Right. Yeah. That's what it all was. And we kind of said that at our year-end show of 2019. And we didn't cover that on our year-end of 2020, but it was really interesting. It was like, no, interest rates are going to go up here, and then it's going to be almost a buyer's market. No, that's not.
Yeah, that didn't happen. But I don't think anybody could tell, no one could predict what happened. But now that it has happened, no one's really out there predicting what's going to happen either. I'm not seeing the same stories. Like by the end of the year, it'll still be a seller's market, or by the end of the year, it's going to be a buyer's market. And it's really interesting to me to see the difference in the lack of prediction, because I think it's just so up in the air according to what, a government can make a decision to shut everybody down for a month. And, that has drastic impact across the board.
Well, and also you have, I believe that rates were held low or kept going lower because of the Rona, and because, there were a lot of layoffs and furloughs at the beginning of the whole thing. And then by the end of the year, it got back to almost normal unemployment rates. But
right,
they kept those interest rates low, which then I think all those people that kept their jobs, I think they were like, well, I have to buy now. Whether they don't care about the Rona anymore, they don't care about whether or not there's inventory. They just see 2.25 and they're like, well, I have to buy.
Yeah.
Like I have to. I've been, I was the millennial that moved back home, and now I can do that. I've saved up the money and I can afford more than I thought. I have to buy. So I think that's a major driver. So you kind of going back to what Colin says, and then adding in as the vaccine becomes more and more, whether people get it or not, it's going to ease the fear of the Rona. That's a great show, by the way.
I mean,
right.
California is opening stuff back up. I'm like, come on. So we have some people joining us.
There's numbers behind that. If you want to, there's numbers behind that. It's not 2 days. Yeah, it's not that didn't happen, but there's numbers behind it. We've been declining since the last lockdown quite a bit, and things are opening up. But yeah.
So if you're just joining us on Clubhouse, you can raise your hand if you want to make a comment about any of these articles that we're talking about. You're joining live the Bearded Men of Real Estate show. We are broadcasting also on YouTube and Facebook at the same time.
Yeah.
Never been done before. You can also hit the plus button, and we'd appreciate if you'd add other real estate professionals that you know of into the show, because we'd love to get their opinions on some of this. If you're not willing to say anything live, that's cool. So the Fed has, I did a little video on this on YouTube, but the Fed has two main jobs. One is to make sure we maintain full employment. The other is to avoid inflation. And right now, everything is backed up. Like, I don't know if you've tried to put an order in for a piece of furniture or something like that, but everything is backed up. Nobody can get supply, and the prices are going up on that stuff, which means that is inflation. The other thing that we've noted is that full employment is determined to be 4 to 6.5%. That's historically what people call full employment, where if you want a job, you can go get a job. The last time I checked, we were at 6.7%. I'm not sure what we're at today. So that has all the markings of getting close to full employment. The price is rising due to inflation and lack of supply. I mean, people can't get stuff in from China still. So because of that, I could see Yellen raising rates sooner rather than later. And if they did, that would ease the tension in some price points, as people would be less likely to run out and buy. I mean, I think you'd see a spike, right? As soon as rates start to increase, people are going to run out and buy. But then after that spike kind of works its way through, you're going to have a lot of people that just kind of reconsider or sit around, or they're not in as much of a hurry as they were because they think rates are going to normalize again. So that should ease the pressure on the supply side. And if we have an increased inventory, I don't know what builders are going to do. I mean, they can say they want to build, but if they can't get supplies,
right,
then how are they going to build? There's plenty of labor, but the prices are still a little high on it. There's, land prices are still high. So, I mean, the prices are going to remain high on new construction, I think.
Well, we do have, I don't know when we're doing this either. It's going to be after the Homegirls show, I think, but we're going to either get my buddy who's in new construction. Again, I mentioned, I think last week, he does the entire process from beginning to end, finding the land and all that stuff. And then, or we may be working on a CEO of a couple big companies as well. So that would be really interesting. Huh?
Yeah, I was just saying, we're going to have them as guests on the show, and we'll kind of pick their brain about what they're looking at and the forecast they're looking at. So,
which will be interesting, because we can talk about new construction all we want, but I don't know what land costs right now. I don't know what the future of that and lumber is right now. So it'll be very interesting to hear that, because we've talked about on the show, we need more new construction to help ease A, B, and C. But what does that really look like?
When is it affordable to them? And
right.
Yeah.